Welcome traders, welcome to my new video. In today's video we will go over ranging and trending market, why I'm a range trader, how to plot the range, what's the range, and how to use it. So let's start. So we have trending market and ranging market. So in the trend market we are creating higher highs and higher lows. Structure is clean, it's intact. We do not sweep the lows previously and we just continue to new highs. And this is the 20 to 30% of the time, this trending condition. And the ranging condition is 70 to 80% of the time, where we can see we are creating higher highs and higher lows, but then they are broken and we may continue in the direction of the trend, but then it gets choppier and again we just rotating and we are balanced. So the range is balanced, market always seek for balance, so this is why it's mostly in the range. Also we are here gathering the liquidity and waiting for the one side to be more aggressive so we can continue higher or lower depending on the positioning and other things. So I focus for this mainly because now it's also summertime, and during summertime there is less breakouts, less volume in the market, so the market is more balanced, so it's favoring the range conditions. So I want to go over this because I'm posting on X analysis and I'm using a lot of fixed profile tool and I'm pulling the ranges on TradingView and I'm building a bias for each day and I'm using a liquidity in conjunction with it. So I want to go over this so you can understand my analysis properly and learn something new. So in the range market, when to build the range, or how to build it. So I would wait for a trending condition to play out until I see some higher low broken, in this case in the uptrend, and once we break the previous established low, we can start thinking about the range. So once we broke the low, let's say here, now you can connect the high and the low point, and this is your high, this is your low, then this is the mid-range, the midpoint 0.5 equilibrium, and here you look how is the market respecting, how is the price action respecting the 0.5 level, and it can tell you what will happen next likely if we go to the highs, if we should start thinking of a range or we will continue higher. So yeah, this is the main thing how to build a range. You need to have swing high and swing low into a trending environment. So when I invert the chart, you need to have strong low and strong high initially, and I will put this fixed range, this tool. I will start plotting from this point, so I will connect the last high or low depending on the trend we are in, and I will connect it. So this will be my range, and now I will just wait how we interacting with the 0.5 level. So I would like to see some reactions here, some choppiness, and then maybe we can anticipate move lower. But first we need to see some kind of respect of this level. I would say this is a good initial confirmation, and the swing high and swing low should have also significant volume spikes, so you know they are important and you can build a range from this because a lot of volume was transacted here. So here is the same principle. We got a trend and then we broke it to the lows, so now you can start anticipating the range. You are pulling the fixed profile range. I will show you in a live example soon. You would start pulling it from this point to this low, and now you would have value area high, let's say somewhere here. Here is your value area high, here is your value area low, here is midpoint, point of control inside the range. we can do it like this, since we have no volume inside. Here is your midpoint, and you could see the, like, here we reacted, so we are respecting it, then we pushed above, and now we are starting to look at the value area high. You look for confirmation on your order flow for volume, trap delta, whatever you want, some supply and demand zones, books. This is like where you use your order flow in conjunction with this. This is giving you context and levels where to trade it and when to trade it is used by order flow. So now you have a key pivotal level, value area high, and you can see market is not reacting on it in your order flow. You stayed patient, then you pushed higher, then higher, and then you can see some weakness. Here you can have also break of market structure, first sign of weakness, and on a retest you can go short. This is your confirmation entry. You put stop loss at the high and you target the value area low or resting liquidity below. It's up to you, and you can go with fixed risk to reward, or you can also shave something off on 0.5, but I would prefer to have at least 1-to-1 for 0.5, so I'm risk free, and then I'm running the next 50% of the position to the value area low, because in these ranges there is 80% of the rule that we go from value area high to value area low until we find some aggressive buyers, sellers that will put the market from balanced mode to imbalanced, and we start trending. So you pretty much play the same until proven otherwise. So this is why range trading is so powerful, because you can play it and it should work 80% of the time. So on the value area low, pretty much same. This is giving you your contextual level. It doesn't mean you should go limit entry and long. No, you need to wait, and you need to use liquidity in conjunction. So you can see you have like equal highs here or poor highs. You cleared it, and then market reversed and accepted back into the value. So you can expect it will traverse the entire value to value area high, and same exact principle, you can shave something off on 0.5% and let the rest run to value area high. So you don't expect the breakout in the range, and you play the same environment until proven otherwise. So I showed you how to identify the range. You need to have strong high and strong low in the uptrend, and in a downtrend you need to have strong low and strong high. Strong low and a strong high, and then you can build a range. And you're observing 0.5 if it's giving you a reaction or not, and this should be on pretty much on higher time frame key level. So this is how you are building your context, and then you are waiting for execution with your order flow tools. Okay, so now let's go over real examples. I will mark ranges. It's very easy to do in hindsight. You can see one range is here, second is here. This range was very big. You can see hodlers wouldn't make money in this range because it took 260 days and we were just chopping. So this is why I recommend you to master this strategy. And here is also some range. And now we are currently building a smaller range inside a bigger range. So this is it. I recommend you to not force the range on the chart. Let price prove you that the range exists. So you can see these are everything clean ranges, but at smaller time frame you could be probably finding a range here inside 1 hourly move upside, and this is not good because you can get easily destroyed. Or always wait for better ranges, and your context should be clean before you are watching your order flow. Otherwise, it will just not work in the trending market, because now we will go over a range when it's invalidated. So when I pull the range like that, you can see last point low is here, and here is the high, and here is the low. So I will connect to this price action, and I have a valid range. You can see value area low, value area high. This is 70% of total volume of the whole range since this point to this point, sorry. And now you can see here we got the acceptance into value area low. We did some SFP, and then we pushed, we rotated to value area high, and here we accepted. We took the range liquidity, with this high, then we did pullback, we retested the value area high with the point of control, and we did send. So market from this point isn't imbalanced, and you should not fade it. You should wait to be for market to be balanced, to establish a new range. A new range is establishing right here. So here I wouldn't push the range to be formed here. I would wait. I wouldn't force it, and I would build first the range right here, because this is the pivotal swing high point, and this is a nice volume low. So this is a good range, and you can wait for value area low. Best is to wait for some deviation below, to take some liquidity below. You can see 1, 2 lows, they were cleaned, and we pushed higher. We rotated the range, and then we did swing value pattern of this high, and we showed some weakness with the range in the range here up, and then we confirmed and went down. So again we accepted below value area high, and we went to val. So we are pretty much rotational in these conditions. So this is what you are looking to find. This is how to mark ranges, basically. Here you can see, if I pull this range, you can see here we had value area high, and we did front run it. So it was like a secondary backtest of the acceptance above this range. So here was the first the retest, acceptance into the trending environment. Then we created the range, we broke outside of it, built another smaller range, and continued higher. So we did front run the value area high. So this was the very good level for the bulls. And you can, inside here, you can create another range. I will connect this low and this high, and this is your range, and you can pull as you go. So towards here, and you can see here we got acceptance into value area. We rotated to VAG, and above VAG we spent multiple days above it, and it was a sign of acceptance, creating higher lows. So trending condition, remember, trending condition, creating higher highs, higher lows. These were signs of acceptance, and then we were pushing higher in the trending market. This is the first point where we broke below the lows. So we have higher highs, higher lows, higher highs, higher lows, higher highs, and then you broke the higher lows here. So you can pull the range from this point. This is the high, this is the low, and I also connect this price action to it. So I have a range. You pushed from this low, you pushed higher, and you are looking to value area high for shorts, because there are a lot of breakout buyers. Then there are some sellers who are selling spot bags, some limit orders, some liquidity. Yeah, you took it, you show, market shows you the sign of weakness, and you enter the short and you target the value area low. And then you wait, you sweep the lows, you can pull this towards the high if you are looking at the lows, then you wait, you push below the lows, you close the buff, so it's bullish, you did swing value pattern, then you reclaim the value area low, you can go long and target value area high. In the smaller ranges, I recommend just going for a full range rotation like this. Because if you target 0.5% or point of control, there is very poor risk to reward. And also, if you want to pick a higher win rate trade, you should go with the direction of the break. So if this direction was bullish, this was a trending environment, these lows are holding, but this is the point where we broke the lows first time, so here is the range, but we are anticipating continuation of a trend. Since you did up move, then range, then you expect the same, so we expect to aggressive buyers to step in and continue higher. So this is why you should look mainly here for the longs and not shorts, because you are adding a confluence from context to a perspective of structural. Okay, you can also see like here was a good range. You can see we broke above, we retested the value area high, so it's naked, this whole range. This is like naked value area high, naked value area low, naked point of control. And when you are coming back, you can see market reacted at the value area low of the range. So it's also giving you another rotation. If you drop here, it's giving you rotation after the acceptance to the value area high. So this pretty much played out. You can see value area high, value area low, and it played out. You did a full range of a rotation of this range. It was a higher probable setup because the range was naked. So once everyone was shorting here in this breakdown, you can see here you swept the lows and you retested the point of control. It's like last kiss before the move down. So here started the downtrend and this whole range was naked. So once you came here, you got some bounces from profit taking. You can see 6% from shorts taking profit from upper regions, and then you accepted below and you traversed the whole area, and here another short started taking profit at value area low, and also some decent DCA buys and value area buys started coming in. So this is the main reason ranges work, and with this one it's even stronger because it was naked, so you have higher chance of rotating it, and it did so. So this is for naked ranges, very good example. They are stronger. This we did test, so there was no reaction. You can see value area high was tested after this sweep of the highs, but then again value area low gave another perfect bounce, and again we bounce right to the value area high, so we did rotate another range. So this is your range what you can trade. And here you will start building a new range. Here is a strong low, here is a strong high, and here is a downtrend. So here you can build another range. You can see here is a value area low after you build it, and we are reacting to it. Once you build this low, you can pull it like this. If you are looking for shorts, you pull it to the lowest low, and from this low we are creating the high. So we are watching the value area high. You can see it's here, but we also took this curved liquidity. You can see one high, second high, and here was the third one. So you pretty much fixed 3 highs. Then you showed the weakness, and you can go again short and target the value area low to the dollar, you can see, and again bounce. And when you are shorting the high, you are putting this like here. Now you are short, it's going down, perfect. Here you are taking the profit and looking for longs. Once you're long from here, you pull this like this, and here is your very well high. Now you are waiting what happens. You shave some profit, but you don't short it blindly. Wait for orderflow signal, and you can see we did another spike for the highs, then some deviation above the value area high, some weakness, and you can go again short and target again the val hit from the highs. Then you go long here, you target again the value area high. Here you can see an acceptance formed at the value area high. So we started trending, higher highs and higher lows, and boom, here we created first range. So we just connect it again, and you are waiting for very high to be hit, but it never got. We got that last kiss from the point of control, and we started dropping like in previous example, like here from point of control, and we started dropping aggressively. Here was the value area low. We accepted below, so the trend continued, but here we fixed the 3 lows and we did visual SFP. So in this point I would be moving this range to the right, because this price action was acceptance before, but after we accepted back to the range. So this was the inefficient move to the upside trend, and we negated and we accepted back to the range. So I will connect to this point, and you can see here we got acceptance, we traversed, and you can go long from this, but still you need to cover your take profit on the value area low or point of control if you are aggressive like this, because you still didn't get the acceptance, and now market is trying to accept at the value area low, but you can see it's very choppy summer, so not looking good. Now we are fighting at this value area low and this value area low. So this is our range we are trading. And you can also build here from this low and this high a new range. And again, you have the value area low like here. So from this high you are waiting for longs. You either wait for the val or the liquidity below the lows. But best is to wait for the grab of the liquidity below the range, and then an acceptance back inside the value area high, value area low. Sorry, this is the best example, because now you have confirmation and you go long like this, because before you would long like here, and the stop loss is very tricky because it can bounce either from directly from the value area low, or it can go deeper, sweep the liquidity, and it's hard to predict how deep the move is. So that's why you wait for market makers to finish their business with the liquidity, and then you wait for the sign of strength. But you need to keep in mind you are playing this smaller range, so from val to vag, and you can see how it's everything overlapping from the big value and even bigger value here. So smaller range is overlapping with these big ones. So this is how you build the proper context, and how to build the ranges in the live market conditions. You just need to wait. Once you have a trend, you need to wait for a strong low, strong high. Here it was a good volume. Here not the best, but in the downtrend you will have also the bigger volume on the downside, and in the uptrend the bigger volume on the upside. So we pretty much wait for a strong high during uptrend or strong low during the downtrend, and then you wait from the counter side to finish the high or low, and then you create the range. You just don't need the high volume on the second touch, because here it will be always smaller volume because you are back inside previous range. You are not outside. Here are a lot of stop losses triggered and a lot of liquidations. Market makers are entering. So here is the region where we have always a higher volume in this markets. This is how it just works. So strong low and high, or strong high and low, depends. So this is it. I hope I summarized it pretty well, how to build it. And just remember, range isn't just two horizontal lines, it's an area of balance where price keeps rotating between two established extremes. And you expect the same until proven otherwise. If the market is in trend, don't fight it. Just wait for strong high or strong low to be put, and then wait for opposing side to form the high and low and connect to create the range, and observe the 0.5 point how it's reacting, and based on that you can say if the range is good or not. And remember, on value area high you want to be taking shorts, and on value area low you can be looking for longs, not the opposite. It's not good. Sometimes it just works that you go above the value area high, you long, and you have free entry, but it's just like during specific months, and it's not worth it. I would say it's a lot of less trades, and the win rate is just low, and I just don't like it. I like to win more often, because in breakout trading strategies you have maybe 35% win rate. It's not much. So this is how you build the context in ranges, and in next video I will talk about order flow, how to use it in these ranges, because it's very important, so you can know if you should stay away or enter the trade. This is just giving you a context. This is just giving you a line in the sand where you should look for your trade. It's not giving you the confirmation, but it's telling you when to stay out of it and when we are balanced and where we are not. So it's very powerful, just to not mess up your order flow entries. So that's pretty much it from me. Hope you like it. In next video I can cover the ranges with the order flow tool, so you can see the exact positionings inside the range, if there are more longs or shorts, and based on that you can adjust a probability if the range is going to be stronger or weaker on the first retest. And that's it, so stay tuned. Bye.